The European Council are due to attend a two-day EU summit beginning this Thursday, where leaders are expected to discuss the eurozone budget. Joining me on the line to discuss this further is Hugh Johnson, Chief Economist and Chairman at Hugh Johnson Advisors. Hello, Hugh. The European Council are due to sit down this week to discuss the eurozone budget, how to advance economic and monetary union, plus mend flaws in the eurozone. What do you expect to come out of this meeting? Can we expect the summit to trigger any moves from leaders?
It appears, based on what I've been able to hear so far, is that there's some fairly intensive disagreement. I don't know how to characterize it except to simply say that it looks like there's intensive disagreement about the size of the budget, the rich countries taking one position, the poor countries taking another position. We may get a vote, we may get a decision as to the size of the budget, but candidly, I don't think it's going to make all that much difference. The real difference comes each year when you approve the budget. The budget that's approved each year will really control the spending that's done each year, and that's going to be really the determining factor. So I frankly don't think a whole lot of agreement, a cohesion will come out of these agreements. I think we'll probably postpone, kick the can down the road, I guess is the expression everybody uses these days, that we'll have some sort of another EU summit in the near future.
One of the limited ideas is to use common funds as incentives to encourage eurozone members to engage in economic reforms that may carry short-term costs. Do you think this strategy is the right one to adopt?
Yeah, that's part of the problem. The part of the problem, of course, is making available funds to, obviously in this case, many of the poor countries. I'm not altogether sure that we're talking about a sizable enough pool of funds to really make a difference. You know, I think that the biggest problem that Europe has faced for a very long time is, first of all, having an adequate pool of capital to make loans to those countries that are obviously struggling. Secondly, of course, the willingness without limit to use those funds and to use them effectively. So I'm not altogether sure that, there could be an agreement to make funds available to each of the member states, but then there's the other issue, of course, is when you make the funds available, what control can you exert? What control can the EU exert in order to sort of control the fiscal practices of the state that receives the fund? It sounds easy. There's no question it sounds easy that a good idea is a common fund, but then the actual execution or implementation is extraordinarily difficult, as we have seen. It's one thing to loan money. It's another thing to get countries to toe the line on fiscal reform in order to deserve those funds.
Another idea leaders will discuss is to use the funds to help governments inside the eurozone to help economies suffering most from external developments that have hit some countries harder than others. What are your thoughts on this strategy?
You know, it's been a little bit misguided all along. Yes, there has to be funds available for those countries that are struggling. But the source of those funds, whether it's the European Union or the European Central Bank, for example, in their open market operations, their process of buying securities, the biggest problem, as I see it, is these are all good ideas, but the question is in the implementation. For example, in the ECB's purchase of securities, there are always others that control them, in other words, put limits on the extent to which they can actually go into the markets and purchase securities, the sovereign debt of countries such as Greece, Spain, Italy, Portugal, and Ireland. When you put those kinds of limits on it, that effectively neutralizes the good things that can come out of those efforts. So I think what we're talking about here is you've really got to take the wraps off. If these things are going to work, you have to do it in much greater size with a greater determination. And candidly, the promise to do it in greater size without limits, without restrictions, it probably means that you're not going to have to do as much as you think. I know that sounds strange, but that's probably the best thing I could say as far as the way this works.
And how can the EU begin to repair the flaws in the eurozone?
It's really difficult to do, and the primary reason is, first of all, there's lots of things that have to happen in Europe, in my judgment, to repair the flaws. The first flaw to me is that we've learned in the U.S. is that the European Central Bank needs absolute independence. The second thing is the allegiance to sort of the principles of the Maastricht Treaty, such as the belief that low deficits to GDP are good, and you need to insist on them under all circumstances. Low debt, 60% of GDP or lower, is a worthwhile target under all economic circumstances. Low inflation is a worthwhile target under all circumstances. That kind of a strict criteria gets fiscal policy headed in the wrong direction. Fiscal policy or tax and spending policy cannot be put in a straitjacket. It cannot, in my judgment, it has to be responsive to other underlying economic conditions or economic reality. And when you put it in a straitjacket, when you have criteria, it's simply not going to work. It's not going to be responsive to underlying economic conditions, and you end up doing things like imposing fiscal restraint or austerity on countries that are in recessions, and that's just a simple formula that conditions are going to get worse, not better. So I think you have to start with those kind of the insistence on those criteria, and then I think you go to the central bank and you talk about the independence of the central bank, and then thirdly you talk about the level of resources that have to be contributed and used by each of the members, whether we're talking about 27 members of the Union or 17 members of the eurozone. We're talking about that it has to be the amount of contribution has to be substantially larger. Even having done all that, even increasing the commitment, we're talking about sovereignty issues. It's extremely difficult, as we've seen with what the British are saying these days. It's very, very difficult when you have the issues of sovereignty at stake. A lot of people, a lot of countries are unwilling, for good reason, to give up on anything that looks like it's encroaching on their sovereignty. So this is, let me just say, simply stated, it's extraordinarily challenging, extraordinarily difficult.
Thanks for joining me, Hugh. That's all we've got time for right now, but stay tuned to Dukascopy TV for more exclusive updates and interviews. For now, though, goodbye.